What's up guys, in today's video I want to explain everything you need to know so you don't get a margin call. That means all your positions get closed automatically and you basically lost your whole account. For that not to happen, there are certain numbers you need to be aware of, which I will explain in this video very quickly and simple. So first of all, how trading works. You need an exchange, a broker and a platform. The exchange is where you actually execute your orders. So like a supermarket where you really buy and sell, your orders are getting filled. And the broker is like a delivery service. It is bringing your buy and sell orders to the market. And the platform is where you can place your orders, basically. For example, a very common platform to trade with is MetaTrader. This is the one I use, it's the oldest one, and then a few newer and more advanced ones are like NinjaTrader or CTrader is also one. And brokers, there are different varieties of brokers and exchanges. There are centralized exchanges where broker and exchange are in one. But it depends also on your asset group. Like for example, for Forex, you need a separate broker because it's decentralized and it's always separate from each other. And they also offer different benefits, like in the spread, for example, the amount of money you need to pay to open a position. There is a lot you can choose from. But to execute your trades, you should connect it to a platform like MetaTrader to really have a good overview and execution for your trades. So I'm going to explain now how to connect your broker with a platform like MetaTrader on the example of XM, my broker, which I really recommend, and I will also put the link in the description below. You can even earn real money on demo challenges here every week. Now you can click here on trade to see the chart. Here we have, for example, the gold chart, and it's really awesome that the broker is connected to TradingView so you can do your analysis on XM. And in general, the broker offers so much. They have live trading classes, a whole video section for education, and just everything really, an economic calendar, news. Now if we go back to home and manage our account, we can see the balance and leverage and everything. Now I changed the balance to 500 because I think that's the smallest amount to start with a real life account, but practice first on the demo. Now that our account size is only $500, we have to add leverage, which is advanced. It's important to understand that you are lending money from the broker to control bigger positions, and you should not over risk. And here you also find your MetaTrader login details, which you can copy and paste into MetaTrader. On your MetaTrader, you can then log in with the server and all your details. And then you should be logged in and you will see here the watch list, charts, trade, your balance with $500. First, you should clean up your watch list, your quotes, so you can just focus on one asset and remember the price levels, get used to the numbers. In this example, I chose gold and added it here. If you click on charts, you will find here now the gold chart, and you can adjust your indicators, whatever you want, objects, settings to your liking, and also see the buy and sell button. Now if we click on trade here, we can either place a market execution order, which means in real time, a buy limit order at a specific price level, you can choose which price, or a sell limit order like in this example because market structure looks bearish, and then you should put your stop loss above a protected swing high or swing low, preferably only risk 1% of your account. So with the $500 balance, it would be $5 per trade. and always set a TP. The best risk to reward ratio is like a 1:2 or 1:1 in the beginning. A risk to reward is how much you risk to win, and that's in this example $5 to make $10. When our position is in profit, we can put our stop loss on break even, so we have a risk-free trade. Only open one position at a time because you need to manage that trade, you need to look after it, and always be aware of these numbers. That's super important. So your balance is your initial deposit, your equity is your profit loss plus your deposit, which you can see here is now 504.66 because it's also counting open positions. The margin is the amount of money you need to deposit to hold a trade open, and that's in the example here 0.01 lot of gold, which only cost us around $4 in margin because we used leverage. Leverage is lending money from the broker to have more margin free. So without leverage, this position would cost us around $4,000 of our own margin capital, but we only have to lend $4 of our $500 balance to hold this position open. Now, this does not mean that you can open more positions. Really, this is where people lose their accounts. If your margin level reaches the 100% level, you are at risk of a margin call. Now, for now, you're very far from that level, but it can happen really fast that you start over trading, over positioning, and yeah, you will really see your margin go down faster than you can think. That's why it's really important that you understand these numbers first, that you understand leverage, that you are lending money. This small position here, you are controlling a $4,000 position because you lent money from the broker. And if it goes against you, you will also make the same amount of loss as profits. So you should always use a stop loss at 1% risk level of your whole balance, so $5. If you follow these rules, you can literally try 100 trades. You will have 100 chances to win. This will be so much more fun to learn trading, trust me. What's up, guys? So that's it for the video. I hope it helps you to start with trading and avoid getting a margin call. Yeah, if you have any more questions, let me know in the comments, and if you like this video, give me a thumbs up and a follow, and I see you in the next video.